Yeah, good morning, everyone. Uh, Yesterday, US market were more of a marginal up, but futures are down on account of warning from the Walmart that profitability will be lower in coming period. Walmart reported result post market hours, and which has taken the Walmart share down. And apart from that, other retailer also prices came off, and that has resulted in two Dow future declining. Asian markets are more of a mix. We are seeing some support from Chinese government to the real estate player. Chinese government is talking about launching a fund to support the real estate developer who are in the distress. And even that is also supporting some commodities also. Yesterday also the iron ore was up, and today also it is up, and steel is also taking some support because of that. Oil has again moved up. Yesterday it was at around 104, and now it is at around 107. So taking clue from the US market, I think Indian market will see some softness in today's market, continuing yesterday's fall. The results are also mixed back in today's session, so that may not come as a support to the equity market. I'll request technical team to take up from here.
Yes, thank you so good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note and we might see some range bound prediction very quick. As of now, Nifty is well placed above its 100 DMA, which gives some sort of a relief sign. But on the higher side, we are witnessing that from last two trading sessions, that Nifty is facing very strong resistance at around 16,700 levels on the closing basis. So yesterday we have seen that the Nifty somehow managed to maintain the support of 16,550 levels and maintain a closing above 16,600 levels. Going ahead, we are likely to witness a sideways momentum as long as Nifty doesn't maintain a positive closing above 16,700 levels. On the downside, the immediate support is placed at 16,540 level, supported by its 100 DMA. Any move below that level, we expect some profit booking below that levels, which might take a Nifty towards 15,400 levels on the downside. But for today intraday purpose, 15,550 is the immediate support level. Below that, 15,470. Whereas on high side, as I said, 16,700 is acting as a very strong resistance level. If it surpasses that level, then 16,770, 16,800 levels can be seen on the intraday basis. Coming towards the Bank Nifty has, yesterday we have seen that it has witnessed a selling pressure at around 37,000 levels. Intraday, on the intraday basis, 36,988 was the high levels. So as long as Bank Nifty trades below 37,000 levels, the positive momentum cannot be seen on the higher sides. If it manages to break that level, then 37,050, 37,400 levels can be seen on the higher side. Whereas on downside, 36,500 and 36,270 are the good support levels of Bank Nifty. Coming towards the Nifty Finance Services, 16,630 and 16,700 are the resistance level for this particular index. Whereas on the downside, 16,450, 16,380 are the good support level for the Nifty Finance. Stock specific as of now on the buying side, Jyoti Labs looks good. This particular counter on the technical front, it just well placed above the all important averages. Also, the interesting fact that it has given the breakout of the factor resistance level. I believe it has a potential to reach up to at least minimum on the high side 190 level. Currently, stock is placed at 167. One can take a long position at the CFD. Stop loss can be kept at 158 level for a target of 160. I request that
Yeah, thank you, Swati. Good morning, everyone. So, as per derivatives data front in yesterday's session, we are seeing that some sort of profit booking was witnessed from the upper levels. So, in today's session, if Nifty gives a closing above 16,600 level, then again we might witness the range to be intact within 16,600 to 16,800 level. Currently, Nifty, we are seeing that in yesterday's session of OI position at 16,500 and 700 strike, put writer got liquidated. So this is a sort of a negative sign. And with that, we are seeing that the India VIX also increased in yesterday's trading session. Almost 6% India VIX increased in yesterday's session. So currently, we are seeing that 16,600 will act as an important supportive level. So once if Nifty manages to give close over 16,600 in today's trading session, then we might witness the pullback again till 16,800 level. As per stock specific, we are seeing that the strong buying being seen from last 3 to 4 trading sessions. So currently, we are seeing that major stocks are giving us some sort of a breakouts at the current level. As per stock specific and sector specific, also we are seeing that specialty chemical front sector is showing some good buying in the current trading market, while PCR buying in yesterday's session closed at 1.18 level. So till the time if PCR is sustaining about 1.05 level, till that point of time we might act as the buying opportunity in the market. Once PCR goes above 1.25 level, then again we might witness fresh buying in the market, and again pullback will be witnessed above 1.25 once PCR goes above that level. So hold your long position with the support of 16,600 on closing basis. But once if Nifty today gives closing below 16,500 level, then the initial next target would be 16,300 to 200 level. So watch on this target. As per stock specific, we expect SRF and Indian Hotel. These two counter have seen strong addition of OI position at near ATM strikes, and we have also recommended on these two counters. So keep watch on these two counters. Thank you.
Good morning. A couple of results which stood out yesterday are one is Craftsman Automation and other is Karur Vysya Bank. So on Craftsman, the result was ahead of expectation. Revenue came 10% ahead of expectation, which was up 3% sequentially and 56% year on year. Quarter one is seasonally weak, and despite of that, we saw that it was higher than Q4 level. So that is encouraging sign. And the growth was led by all segments, forgings, aluminum die casting and engineering. EBITDA margin also increased, came 1% above expectation at 24%. And the key notable thing on margin front was that aluminum die casting segment posted double-digit segmental margin for the first time at 12%. Historically, the margins in this segment were stuck at just 5 to 6%, and management was guiding that it will improve, but finally it has now improved. And we think the stock is a good proxy play on revival in auto and CV upcycle, as well as industrial capex revival, as 1/4 of the revenue also comes from engineering. So stock should outperform going forward. Karur Vysya Bank result was also above expectations because of improved asset quality and also acceleration in loan growth. The credit cost has now stabilized at 1% levels. GNP and NPA witnessed a sharp decline because of lower slippages, and ROA has reached 1.1% after many years. And stock is still available at PSU bank kind of valuations, which we feel there is a good scope for re-rating out here. So we are positive on Karur Vysya Bank. Axis Bank result was above expectation, mainly because of lower credit cost, which came at 0.2% versus expectation of 0.7%. And for the entire of last year, it was at 1.1%. Slippage was, which was historically stuck at around 3%, between 3.5% since many quarters. Since last couple of quarters, we have seen the trend that it has come down, and this quarter it was at just 2.1%, which is in line with what HDFC and Kotak have posted. So this is a good sign. Restructured and BB and below book have also come further down. The only parameter where the stock is lagging behind peers now is one is advances growth, where sequentially we saw a 1% decline, and also year-on-year growth was at 14% versus 20% plus for peers. And also cost to income, where peers are at 40-42%, and Axis Bank cost to income in fact deteriorated further this quarter to 52% because of continued investments in technology. So once we think the advances growth also picks up, then the discount it is commanding to the peers will come down. But still, looking at the good performance on asset quality, we think stock will do well going forward, and we are positive. Canara Bank result was in line with expectation. Credit cost has stabilized at 2%. GNPA declined marginally to 7% from 7.5%, and however ROA remains very low at just 0.4%, and that's why we are neutral on the stock. Central Bank of India result continued to remain weak. Slippage remains sticky at around 5% mark, and GNPA also increased slightly. We suggest to avoid the stock. IIFL Wealth Management result was in line with expectation. AUM declined by 3.7% sequentially. However, under recurring revenue segment, what we call the asset management AUM, that declined by just 1% sequentially, which means company has gained some market share, because we saw in case of HDFC and other industry-wide also the mutual fund AUM has declined by around 3.5%. So on this particular segment, performance was good. But however, on the broking segment, the broking AUM declined by 7%, which was negative. And overall profit on a sequential basis declined by 5%. We are neutral on IIFL Wealth. Among other news, PSP Projects has received orders worth 257 crores, which looking at the size of the company is marginally positive. And Bajaj Finserv board will be meeting tomorrow to consider stock split and issue of bonus shares. So that is positive sentimentally for Bajaj Finserv. Thank you.
Good morning, everyone. Sonata Software has posted ahead of expectation set of numbers for the quarter, driven by domestic business. Dollar revenue came in at 56.8 million versus expectation of 57 million. EBITDA from international operation came at 116 crore versus QQ of 113 crore. Board has approved bonus issue in the ratio of 1:3. Stock is trading at PE of 15.8 times FY24 EPS. Tech Mahindra has posted broadly in line set of numbers for the quarter. TCV for the quarter came at $802 million, which is within the company's aim of $700 to $1 billion. EBIT margin contracted by 220 bips QOQ. However, management indicates that this is bottomed out, and every quarter they expect margins to improve by 100 to 150 bips, with Q4 exit margin is expected to be at 14%. They also indicate that there are no changes in the spending pattern, and with order backlog, they ensure a good performance in FY23. Outlook is neutral on the company. Stock is trading at 13.4 times FY23 EPS. Thank you.
Yeah, good morning. Tata Steel result was above expectation, mainly driven by its European business. Consolidated sales volume stood at 6.6 million ton versus 8 million ton sequentially. EBITDA per ton came at 22,618 versus 18,764 quarter on quarter. Margins came in at 24% versus expectation of 21%. Tata Steel, for its Europe business, sales volume stood at 2.14 million ton versus 2.4 million ton sequentially. EBITDA per ton came at 28,220 versus 18,135. The company's consolidated net debt stood at rupees 54,504 by the end of June quarter. Jindal Stainless reported inline set of numbers. Sales volume came at 236,000 ton versus 269,000 ton sequentially. EBITDA per ton came at 23,294 versus 31,266 sequentially. Margin came in line with expectation at 10%. Maharashtra Seamless reported improved set of numbers. Revenue came in at 1,334 crores versus 1,419. EBITDA came at 226 crores versus 175 sequentially. Vardhaman Special Steel reported improved set of numbers. Revenue came at 469 crores versus 343 crores quarter on quarter. EBITDA came at 46 crores versus 38 crores sequentially. Margins, however, it dropped from 11% last quarter to 9.7%. That's it from my side. Thank you.
Good morning. So Shanti Gears announced its results. The results have improved. The revenue came in at 99 crore, which saw a marginal degrowth of 5% on a sequential basis, but however saw a growth of 48% on a YOY basis. The EBITDA margin came in at 18.3%, which was flat at 18.2% on a sequential basis. The stock is trading at a PE of 40.2 times TTM EPS. Swaraj Engines announced its results. The results have improved. Revenue came in at 398 crore, which grew by 64% on a sequential basis and 27% on a YOY basis. EBITDA margin came in at 13.8%, which saw a 1% growth from 12.8% on a sequential basis. The share is trading at a PE of 14.6 times FY24 EPS. Thank you.
Yeah, apart from this, a few more results. Sterlite Technology reported numbers, though numbers were declining. But the commentary was comparatively positive from the management, indicating that things are somewhere bottoming out. In the result, if we see, the gross margin has seen some improvement quarter on quarter by around 450 basis points, though EBITDA margin has not seen the reflection of that, mainly because of the higher other operating expenses, which has resulted into lower EBITDA margin growth. Apart from that, the positive things which the company has indicated is that they had taken price increase in the US for the supply of their optical fiber and cable, and that is to the extent of around 7 to 10%, and US now is almost contributing around 25% of their sales, so that will result into higher margins from there. And apart from that, even the US European market, they are also pursuing to increase the prices of the optical fiber cable over there. The demand outlook is mainly driven by 5G and fiber to home, and then data centers. These are the three key driver for the implementation of the demand for the optical fiber and optical fiber cable. And international business is the major contributor of their revenue of almost over 75% now. And that is the only risk, as the recession kick in into the developed market, then they might have some impact on their demand side. Apart from that, things looks positive from here for that. Stock is somewhere trading at around 10 times FY24 consensus earning. Then Chennai Petro came up with the numbers, and numbers were quite positive. But these numbers has to be read from the perspective that how was the GRM, and the GRM in this quarter has increased substantially, but post that government has put up some restrictions also, and GRM has also come off very sharply. So nothing to read in these good results. Quite possible that the coming results may not be so good, or maybe even very much declining from here. Then Microtech developer, that is Lodha developer, came up with the numbers. The key thing to watch in the results are the pre-sales, and the pre-sales number company has given much before that, and they were quite okay set of numbers on the pre-sale side. They had sold almost around 2,800 crores of sales in Q1 as compared to 3,400 in the fourth quarter. Fourth quarter is generally a larger quarter, but anyhow, Q1 sales was very good. Apart from that, the sales in EBITDA are more of a lagging figure, so nothing to read into that much, but overall the results were okay. Tanla platform has shown some declining numbers. We may have similar impact on Root Mobile. This is mainly because of their gross margin declined sharply in this quarter, indicating that there is an increasing competition in the Indian market for the Tanla. We had seen earlier that two of the international player has entered into Indian market, and that is now started showing negative impact for the incumbent player like Tanla and Root Mobile. So need to be careful in this stock. Stock can see some more decline, though stock is under correction since last many months. Now results for 28th. The expectation is that Jubilant Food may report declining numbers, mainly on account of decline in the margins quarter on quarter and year on year to around 21.8% from 25%, last year 24%. Then Nestle is likely to report numbers, and the numbers are more of a okay set of numbers, with revenue quarter on quarter seeing some decline of 3.4%, but year on year 10.7% growth. And margins are also likely to see some marginal decline from 23.2 to 22.8%. So okay set of number from Nestle. Nippon Life is indicating some positive trend as compared to HDFC AMC. Here quarter on quarter revenue and PAT is EBITDA is likely to show positive trend, wherein revenue is likely to increase by around 1.3% and EBITDA by 8.1%. We had seen the other most of the company related to the financial sectors are showing some declining trend quarter on quarter. Here the expectations are positive, so maybe a positive result coming from Nippon Life. The NOSIL results are likely to be not likely to be more of a okay set of number. Last quarter we had seen that the margin expanded to 24%. That was an extraordinary margin which we had seen in the last quarter, but this quarter seems like it will be a more of a normalized margin of around 18%, which is expected from that company. Then Orient Cement is also likely to report okay set of number, with EBITDA per ton quarter on quarter declining by around 130 rupees. Then H3 Cement is also likely to report numbers which are likely to be more of an okay set of number, wherein EBITDA per ton is likely to decline by around 40 rupees quarter on quarter. TVS Motor is likely to report number. Here numbers are likely to show more of a okay set of number. Quarter on quarter we know that the volume has increased by around 6% and year on year 38%. Margins is the key thing to watch, and that is likely to remain stable quarter on quarter at 10.1%. Then Vedanta is likely to report number. Here again, we had already seen that the Hindustan Zinc has come up with the numbers, and almost 60% of the result is from the Hindustan Zinc. And apart from that, the margins are likely to see some softness quarter on quarter, mainly on account of aluminum prices corrections. So more of a quarter on quarter, it will show some declining trend, but that is more reflected from the prices of the commodities. Then Westlife Developer, that is Domino, that is also likely to show some improved set of number quarter on quarter. Here the margins are expected to increase from 14% to 15%, and revenue is also likely to increase both year on year and quarter on quarter. Quarter on quarter, it is expected to increase by around 11%. So that is likely to show positive trend. Then Mahindra and Mahindra Finance is also likely to report a better number. NII is likely to grow by around 36%, and PBP is likely to grow by 24%. Then SBI card is also likely to report number. Here the expectation is that the numbers are likely to be positive. We had seen most of the bank has reported very good growth in the new card issuance and the card spend also. So here this is a standalone card company, so should report better number in this quarter. SBI Life is also likely to report good numbers in this quarter, wherein VNB margins is likely to increase from 21 to 24%, and VNB is likely to grow by around 97% and APE by 74%. Then Sriram Transport is likely to report more of a okay set of numbers. So that's all from us. Thank you very much and have a good. Now I'll hand it over to commodity people.
Yeah, thank you, sir. Good morning, everyone. Today, some of pullback should be expected in commodity markets. Gold should be bought around 50,500 with a stop loss of 50,300. Prices are likely to test 50,850, 51,000 on the higher end. Similarly, silver, there could be a sideways movement, but a pullback, a short covering could be expected. Um, so one can buy with a stop loss of 54,000, and the pricing again can test to 55, 100 to 200 levels. And copper looks good. 638, 639 should be good levels to enter long. So one can buy with a stop loss of 633. Overall, on a closing basis, above 640, prices should rally further. So maybe 650, 655 should be on the cards. Aluminum also looks good. Aluminum one can buy around 230, 210 with a stop loss of 208. Prices should test to the 214. Similarly, zinc supportive at 272. So buying on dips is recommended. Again, it can test 276, 277 on higher end. Crude also looks positive. Already it's open up 100 plus. Buying is recommended on dips, maybe 77, 70, 78 should be good levels to go along with a stop loss of 77. Prices again can test 79, 50, 8,000 on higher end. Natural gas also should test 7,000, 700 mark. Buying on dips is recommended as long as it's holding 678. One can buy on dips. That's it from me. Ria should take off.
Good morning, everyone. So let's look at the currency outlook for today. Now, the Fed rate decision is due tomorrow. Taking into consideration that the inflation has again given an aggressive upside coming to 9.1%. 75 bips rate hike will be expected. After that, however, Fed should take a breather, taking into consideration that the growth is already slowing down, which is reflected from the housing market numbers, which has softened. Tech companies are curbing their hiring process, and also the employment claims are edging up. So overall, what are the two things that could work for Indian rupee? For on the positive side, if you look, for FPI inflows have turned marginally positive. This has come after the aggressive selling that they had commenced from September 21. So from that month, this is the first month in July that we are seeing FPI have turned marginally positive. Two source of inflows could have a positive effect on the Indian rupee, which is SBI raising bonds around 11,000 crores, and Yes Bank are expected to get a $1 billion equity investment. Apart from that, US data negative turning negative is also fueling in the recession fears, and could lead for Fed to halt its or go soft on its hawkish stand. The thing that could work for the Indian rupee is of the Fed rate hike. However, 75 bips is already already factored it into the market, but if there is a very aggressive or a hawkish stand, that could impact the Indian rupee on the negative way. There is also the expiry for the current contract tomorrow, on which we are seeing a high open interest, which could lead the Indian rupee towards again on the ending on a higher side or above the 80 levels. Apart from that, the crude oil edging up, and the current account deficit trade deficit widening, both of these factors would again lead a negative impact. Overall, the pressure will remain on the Indian rupee. 80 for the current expiry, we could see it ending around 79.95. However, for the August expiry, one could look for a breakout of 80.06 to go long into the Indian rupee for a target of 80.32, keeping the stop loss at 79.90. For the others pair, I think for Euro INR, if the ECB representative had come out and said that they are not yet done with the aggressive rate hikes, and the same could be expected into the September meet as well. Overall, I think Euro and Pound could see an upside tick. Wait. Could see, so 81.90 for the current contract is something that you can look forward with into the Euro INR. As far as pound is concerned, 96.54 should be the resistance. So both of these 81.90 for Euro INR and 96.54 for GPB INR, both of them are the resistance for the intraday and could be taken as the target when gone long into both these pairs. So that's it from the currency side. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.